All right, so as we all know, there is no risk-free investment in the markets, but there are investment avenues through which you can mitigate your risk. One such category of investment is Flexi Cap category in mutual funds, where an investor gets to invest across market caps and also enjoys the benefits of diversification. So let's take a closer look on one of these funds. I'm talking about PGIM Flexi Cap, and to talk more on the fund as well as the markets way ahead, I have Vinay Paharia, CIO, PGIM India Mutual Fund. Vinay, good evening. Thank you so much for giving your time to the Money Show today. And we'll be focusing on the Flexi Cap Fund. But because I have you on the show today, I really want to know about the direction ahead in the market after touching an all-time high. How does it feel? And extended delay, or were you expecting around this time?
Thank you. Thank you for having me on your show, Kavita. So, I think definitely it's party all over, and I'm sure you have just celebrated the party. So everyone is in a jubilant mood. Investors are making lots of money, which is good to see, and we are in the right place, right time. So I think everything looks fairly optimistic at this point of time. Having said that, we need to remember one very important aspect about investing, which is that if you are paying higher prices, which you are borrowing some returns from the future. So that is something which we need to remember at this point of time.
What are your thoughts today in
Right, so stay invested for long, and if you are someone who cannot take much risk, then via mutual fund, participate in equity, but do have equity in your portfolio. That's the word coming in from Ashish Kumar Chauhan, MD, CEO, NSE, and with me I have Vinay Paharia, CIO, PGIM Mutual Fund. So Vinay, very interesting, and something what you were also talking about earlier, Mr. Chauhan just mentioned and elaborated on the same theme. A day when the market touched its all-time high, and a day where we also saw SIP numbers coming to yet another all-time high, crossing 15,800 crores mark. So a lot of optimism. Does this also mean that market, I'm not talking about the investment numbers, but generally the market is also slightly directionless? How would you explain this?
I would just say that and differ with you that the market is right now not directionless. It is clearly zooming in one direction. There is clearly a lot of optimism. We are seeing very broad exuberance, especially in the small and mid cap space. So right since 1st of April this year, we have seen a consistent rally in the entire broader market space, which has significantly outperformed. So clearly, the markets are in a very, very optimistic mood.
Numbers coming this week from Indian markets as well as international markets, and the primary concerns would definitely emerge better once we have a clear picture in terms of numbers and data that's going to come in. Inflation data is going to come in, and we also have the export import data, etc. But then talking about this entire euphoria, this is a clear bull territory that we are into right now. Is it also the time for an investor to either initiate something for a longer term or maybe a mid-term perspective? How do you look at it? Also, how do you look at the further trajectory of the market being led by specific sectors? Do you think it's going to be an all-sector rally, or specific sectors that would just lead this market?
So I think, Kavita, what we should do is first and foremost lengthen the horizon when we are looking at equity. And when we do that, clearly we can see that equities as an asset class can do very well, irrespective of the sectors, and many times also irrespective of the valuation, for the simple reason because equities depend on the underlying assets growth to perform. And growth, as we just heard from many of our leaders, has been very, very strong for India and is likely to remain very strong on a structural basis for the next few years. And when that happens, and when an investor has a long-term time horizon, I think clearly remaining invested in equity, irrespective of sectors, capitalization, remains a good bet. However, a very important caveat is they should not be swayed by fluctuations, because when you are investing at such valuations, there could be drawdowns in the near term, but over a medium term to long term, we remain fairly optimistic on equities.
And what specific sectors are we talking about over here?
So I think from a sectoral perspective, we remain fairly positive on financials and financial services, which means banks, NBFCs, insurance, etc. We remain positive on healthcare as a sector. We remain positive on consumer discretionary specifically as a sector. So these are very broad, big picture themes where valuations are reasonable, the underlying growth is good, and we are underweight sectors, largely industrials, which is the cap goods or infra space, purely because of valuation reasons, because there has been a very, very sharp rally in that space. So those are some of the places. We are also underweight energy as a sector. So these are two sectors where we are underweight.
Talk about your flexi cap fund, where a lot of large cap oriented flexi cap funds, we saw them tilting towards mid cap and small cap, considering the kind of rally. What's the status across market cap in your fund?
So we are flexi cap in true sense, which means when there is opportunities in terms of valuation in one capitalization, we move towards that. So, for example, on 1st April, we started with a higher allocation to small and mid cap relative to the peer group in the Flexi Cap fund. And as we saw valuations zoom across, the potential returns started falling in the small and mid cap space, and we started moving the fund towards large cap. So currently, we are slightly more large cap biased compared to small and mid caps on a relative basis.
Are the valuations really comfortable in large caps now? How do you look at the space as compared to mid cap, small cap run up, or is there more steam left in mid cap and small caps?
So mid caps and small caps is a very, very broad basket of stocks. And there will always be opportunities in that space. Having said that, if you look at the overall basket, clearly there are valuation concerns. And more than valuation, Kavita, I would say that the challenge in the mid cap and small cap space is the nature of the companies which are delivering very strong returns. What we have observed is that companies which have got weaker growth rates in the past and companies which have got weaker returns on equities in the past have actually done the best in the last 6 months. And that is an area of concern for us. And in fact, also an opportunity, because good quality companies which are growing fast in the small and mid cap space are available at a relatively more attractive valuation. So I think we are optimistic on high quality, high growth space in the mid cap space and small cap space. And there are many companies in the large cap space which are attractively valued, which satisfy both these conditions as well.
Going ahead, any chance of increasing your exposure in small cap specifically, because the kind of numbers that we are seeing, even the Amphi data that also shows more money has gone in the small cap space. What is your view on this?
Yeah, so our decisions are largely driven by what could be the potential return for investing in a particular stock. So we construct our portfolios bottom up. As we just discussed, the valuations in the small and mid cap space have increased substantially on a relative basis, which means opportunities are more in the large cap space at this point of time. And hence, we have moved more towards large cap. But if we are able to spot more opportunities in the small and mid cap space, definitely we will move towards that. And that is why the nature of the Flexi Cap Fund helps us significantly in making such changes.
How would you explain this? The kind of run up we've seen in mid cap and small cap, and you right now look like a very large cap heavy fund, flexi cap fund. Have your investors missed the rally that they could have seen a flexi cap which was more tilted towards maybe mid cap or small cap?
It depends on the time horizon you look at it, Kavita, because the more narrow you look at from a time horizon perspective, the more errors will you tend to make when investing in equity. So when you look at either investing in a fund or a stock, if you look at rolling 3-year returns, you will get a much better picture. And hence, when we are investing today, we are not investing for the next 1 month, 2 months, or 6 months, or 1 year. We would always tend to look at what can happen to an underlying investment over a 3-year period. So I think over a 3-year period, I'm very, very optimistic that my investors would definitely not miss out and they would come out victorious.
Vinay, because you're a large cap heavy fund, a flexi cap fund, does it make sense for an investor to also have a pure large cap fund in the portfolio, or that's not needed because I think you've got enough exposure in large cap?
Uh, the reason why FlexiCap funds exist is to make life simple for investors. The reason they exist is to say that you invest in one fund and let the portfolio manager make the decision. When large caps are more attractive, move towards large cap. When small and mid caps are more attractive, move towards small and mid caps. And hence, the objective of an active flexi cap fund is to ensure that such changes to capitalization based investment are made seamlessly without intervention of the investor. And that's why I think this is a great category for any investor.
Right, Vinay, I think that will be all. Thank you so much for being on the show today and helping our viewers mark out their strategy going ahead in the markets. Thank you.
Thank you. Thank you. My pleasure.
On that note, we'll slip into a quick break, but then post that, let's talk about health insurance, and specifically, let's talk about the entire game of grievance redressal that we've been witnessing, or policy holders are actually going through when it comes to health insurance claims. More on this after this break.